Welcome back to Count Me In, IMA's podcast about all things affecting the accounting and finance world. I'm your host, Adam Larson, and this is episode 143 of our series. Today's conversation features Michael Schmit, the corporate controller and chief accounting officer of SWM. The accounting team at SWM has been going through a business transformation, including the implementation of RPA, improved operational analytics, and several process improvements to meet the needs of the growing business. And Michael has been the leader of these efforts. In this episode, he discusses the importance of identifying the company's why when considering a transformation and the role of technology in the process. Keep listening as we head over to hear more now.
So business transformation is not really new when it comes to accounting and finance, but the systems, the processes, the things that are being transformed have certainly evolved. So what has accounting transformation looked like at SWM? And how does that compare to previous transformation projects or other things you've seen evolve in your experiences?
Yeah, I think innovation in accounting and finance really isn't new, but I think the why we're doing this and the how we'll achieve this really has been continuing to evolve to ensure that we're meeting customers' needs. For instance, at SWM, our accounting business transformation is really following our overall company's business transformation. SWM has been growing at an accelerated pace, both organically and through acquisition. In the last year and a half, or the last, 2.5 years since I've been here, we've actually grown from about $1 billion in revenue and 22 production facilities in 8 countries to now $1.5 billion in revenue with 36 production facilities in 11 countries. And now we operate in over 90 countries. So we've been really focused on integrating our acquisitions while transforming our own accounting processes, leveraging best practices from companies we've acquired, as well as adding new technologies along the way. So our why wasn't to just cut costs. It was to obtain synergies from the business, but also improve on kind of our status quo and add more value from our roles as accountants. The vision for the accounting organization here is to operate as one team and one company to support our company's vision through knowledge sharing, process improvements, and leveraging technologies to execute world-class business partnering and fiduciary excellence. And so all those things are kind of leading the transformation. And we see the fiduciary excellence piece as the absolute minimum expectation. That includes complying with all laws and regulations, and to do that as efficiently as possible. But then also business partnering, which is partnering with companies' leadership, management, each other on our teams, and also other groups to provide actionable, insightful reporting to assist in decision-making to achieve the company's vision. So in other words, taking the rear view, kind of mirror view of driving down the road and focus more on what's coming on the windshield in the future from the road ahead. So this is different than past transformations I was involved with at other companies, because I think the why was really always focused on how do we lower costs, and the how was we're going to offshore it to a lower cost place like the Philippines or India. Sometimes robotics were in there as well. But really, that's the main difference I see.
So we'll get back to the specific why at SWM and some of the goals and, progress that you've seen in just a minute. We'll go to that. But I first want to, take a step back. You mentioned business partnering, another term that's, again, not new, but it's definitely more prominent, I think, these days when it comes to accounting and finance. This whole conversation has a lot to do with the future of work. And that's another hot topic, a phrase that is getting thrown around a lot. So before we really dive into what all this means and the connection between the future of work, transformation, business partnering, I'm curious what you think about the future of work. How do you define it? What are some of the main considerations, or really, why listeners should be aware of what's going on when people talk about the future of work?
Yeah, to me, the future of work really boils down to value creation. In other words, how can we as accounting professionals add more value beyond what we have done historically and what can now frankly be done at lower rates in other countries or be replaced by technology. We're evolving from the history of being just scorekeepers to being trusted business partners. And that is someone that's going to provide those insights to help drive decisions of the business. And the rate of change now is greater than it's ever been in most industries, and it's going to continue to increase. So as accountants, we have to be better prepared to change and help our businesses succeed in this. So we need to be able to evolve ourselves and improve at least at the speed of our business. And why should your listeners be, interested in that? Frankly, so they don't get left behind. I mean, I literally, having their roles outsourced overseas or replaced by technology. Accountants today really must focus on continuing to develop their own business skills and be able to articulate the value they're bringing to the business above, debits and credits and internal controls. That's just not good enough anymore and won't be in the future.
So that's a great point. And we have a lot of conversations about this, and, the need for upskilling, reskilling, and technology is a big part of that. And we'll get to technology coming up next, but to connect the dots in our conversation so far, the accounting transformation that you talked about, the specific why at SWM, other initiatives, how is that preparing you and your team for this future of work?
We're focusing on just business-driven value integrators, predictive insights, how to help the future of our enterprise, not just the enterprise today, but also getting the basics and fiduciary portion of our jobs done efficiently and effectively. Leveraging technologies, we'll talk more about RPAs and advanced analytics, automated AP, online account reconciliations, all those things. A great recent example has been during the COVID-19 pandemic, when the world was, hit in 2020. Suddenly we had our 100 plus accountants worldwide all working from home. Luckily, we had already started our journey, and we'd implemented Blackline Systems, which is an online task management tool and account reconciliation tool at most of our locations. So it's a cloud-based tool that you can really access from any browser, and it's connected automatically to our GL and subledgers. So we were able to prepare, close and prepare our account recs and seamlessly, and it didn't really impact our SOX controls, internal controls. So our internal auditors and external auditors were able to audit, and we were able to meet all our deadlines, while other companies may have been struggling to kind of change things and have special actions taken during COVID-19. We were already prepared in that front. And similarly, on the AP side, we had implemented an automated AP software system called MediasFlow, where a lot of our vendors automatically are emailing or sending invoices to that, and then the entire delegation of authority is built in within there. So, whether it comes to me or our CFO or CEO, we can review the invoice online, whether it's a iPad, phone, computer, whatever, and we can make sure that that gets approved appropriately once good controls. So those are great examples of things we had implemented to sort of make the blocking and tackling, if you will, easier, but really saved us during the pandemic. And so we weren't really behind the eight ball. We were kind of business as usual, and felt that gave us an advantage. We were able to file our SEC filings on time and get our auditors everything they needed. The board was happy. And still we executed 2 acquisitions during the pandemic, where other companies were trying to figure out how to, just do the basic internal controls. So I think that really gave us a competitive advantage.
Those certainly are great examples, and it's great progress in a difficult time for many. I also appreciate the football reference with blocking and tackling. I can always relate to that. So good analogy there. And, behind all of this, you started it off and talked about it a little bit. Obviously, the main driver behind transformation, the preparation and everything that goes into the future of work, what you're able to accomplish, it's technology. And you talked a little bit about the technological advancements you've invested in, you've implemented, and some of the improvements or the capabilities that were there because of it. Can you take it a step further, though, and talk a little bit about some of the benefits, the rewards, as opposed to just, being able to do your business like you were talking about in a difficult time? How has technology enabled you to take a step further as well?
In addition to Blackline and Medias, I mentioned RPAs, which is robotic process automation. And what that really is something that is a computer software package that can mimic human behavior. So it can log into various systems. You can give the RPA its own email. You can have it, as long as it's kind of repeatable tasks, it can take data, manipulate it, and put it in other places. So a good recent example of that was something actually we implemented during the pandemic. We used consultant kind of like this on a Skype call and get it all set up. And we were able to kind of take this program rule-based tasks and eliminate non-repetitive or non-value repetitive manual work in the process. For instance, we had a controller that was spending a day during the close process taking manufacturing variances and certain employee costs and allocating them to multiple sites, to multiple product families and product lines. And this required downloads from lots of systems, data manipulation, and literally hundreds of uploads and journal entries. So we were able to build an RPA that now does that in the background in about an hour's time. And so while that's happening, that same controller is now spending that time on analytics and helping kind of get data more quickly to the FP&A team, to the leadership team, to operations, to make better decisions quicker. So really, he's not working late hours, just closing the books. The data is all still happening, and we're seeing the benefits of that, already. Other things, other tools. OneStream is our consolidation tool, which is some of your listeners may be familiar with, like a Hyperion, and those are pretty common now with large multinational companies. But for a company like us, as we're doing acquisitions and there's multiple ERPs, the ability to consolidate quickly, pull that in, and meet our SEC deadlines. And we've implemented Lease Accelerator, which is a ASC 842 solution, and that helped us. We've just bought some companies overseas who had never had to do that before. So, inputting that in quickly within the quarter, being able to give them their journal entries. We're key to WDES for the filings. And then for analytics, we're using Alteryx, and I've used Tableau in the past as well. And we're continuing to kind of find new ways to use that to help drive better decisions as well.
So let's talk about all this a little bit more. You just brought in analytics, and obviously that's a key part of it, technology, the driver behind a lot of the data that's available, as you mentioned. So you've obviously had great success. You've seen the benefits of this transformation and the use of technology. How do you recommend going about it? Maybe our listeners aren't working for these multinationals, these big companies that already have this in place. Maybe it's part of a transformation project they're planning. What are some of the best practices or, step-by-step things that they can consider in order to improve their accounting or finance functions?
Sure. I'd say one thing is don't try to do too much too quickly. There's going to be plenty of salespeople, vendors, consultants who are ready to sell you technology with lots of promises that are going to fix problems you didn't even know you had. So I would say don't look for a problem to leverage this cool technology for. Make sure you actually have something that is going to add value to the organization by you implementing this. Do your homework, make sure there's really real value for you. For instance, if you're at a small company, you may not need an automated AP system. You may have a small number. It may not be a ton of value there to implement this, or there may be a lower cost provider of some of these things online that larger companies might not look at. So, but that won't stop vendors and consultants trying to sell you these things that you may not need. But I'd always say, I'll always start small. Run a pilot, a proof of concept. So let's say you think there really is value in implementing automated account reconciliation software. There's Trintech, there's Blackline, there's others. I personally like Blackline, used it at a couple companies, but it's very, it's not cheap. It's expensive technology. So you may not need all the bells and whistles of a Blackline at a smaller company. You may not have, multiple locations that in different countries where there may be a lower price that does everything you need. So, do a pilot, do a small taste try. And if you can afford it, I would always suggest using an implementation partner. a consultant that has done this many times before, and maybe also using a third party to help kind of evaluate different vendors, because there are lots of products out there for the different, whether it's AP, whether it's RPA, whether it's analytics. There's tons of solutions, and I can't say one's better than another because they're better in different situations and for different companies. So, we've chosen the ones that were good for our company for various reasons, but there may be a different solution for you. So that gets back to doing your homework. So all those things. And then finally, don't underestimate what it takes to make these changes. You can't do it alone. Accountants sometimes aren't always the ones to get up out of their desk and partner with other people in the business. Hopefully nowadays most do, but you have to work with IT. If it's an AP automation, you have to work with purchasing. You can't do this in a box, or you're going to fail, or you're going to implement this great system and no one's going to use it. So I think that's it. Don't underestimate, and bring in all those key stakeholders that are going to be impacted by the technology.
That's a great recommendation. Good suggestions. And I really like how everything you're sharing ties back to, the individual why, or the individual is the individual, the department, the company, whatever, but it's all about why, the value to you. So I appreciate you sharing all those steps. The last question I have for you, if it's all right, and I like to ask this question when we're talking about transformation, the future of work, things like that. Obviously, nobody has a crystal ball, but it's nice to kind of think about what may be coming down the road next, right? So when it comes to the future of work, the role of the accountant or, the finance function, what do you predict is going to happen? You talked a little bit about how transformation has changed a little bit because of different things that happen in the industry. But what else do you think our listeners should be keeping an eye out for in the future?
Yeah, and I have thoughts on this, and I would say it's probably not going to be a tidal wave of all these things happening at once. It'll happen more quickly, I think, for the larger multinational companies. But some of these changes may not impact the smaller single owner companies and things like that for quite a while. But overall, I see, robotic process automation, mimicking of human action will become cheaper and more easily available. It'll just become commonplace. So that gets back to learning more valuable skill sets for the future accountants. And then as artificial intelligence continues to advance, I think, especially the businesses that can afford it and that can gain the most value from it will continue to adopt things like the cognitive automation, and cognitive engagement is coming, which will augment human judgment, human intelligence. It'll utilize machine learning, ultimately predictive decision-making, and natural engagement with humans. It'll be, like the robocalls we get that'll enter into business, I think, in our lifetime, probably sooner than we realize. Eventually, we'll have AI in our ERPs and in our other tools. I think this will, like I mentioned, mimic human intelligence and eventually completely replicate interactions and possibly even make decisions. So we all have to stay in front of that. I think our government and agencies, our auditors and others will continue to use these tools for their own use, and there'll be more continual monitoring of financial activities and of accounting. And like I said, it'll eventually trickle down to the smaller businesses, but I think kind of the large multinationals will probably be hit first by the auditors and government, and they better stay in front of it in themselves too. So that's how I see, and I think some of that's already happening, and I just think it's going to be next 5-10 years, not 50 years.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.